Good morning. It is a pleasure to dive into these high level trading and investment topics with you. Since we are in March 2026, the landscape for both crypto options and global equity has evolved significantly with clearer regulation and strategic consolidations. Below is the detailed Part 1, Covered Strangle, Covered Combination, another name. In crypto, in the USA, crypto options trading on platforms like Coinbase Derivatives or LedgerX has become a staple for institutional and retail yield farmers. A covered strangle is an advanced neutral to bullish income strategy. It is a essential a covered call with an added short put component. The setup: long asset, you hold the underlying crypto, e.g. 1 BTC or 10 ETH. Short call, you sell on out of the money. OTM call options, easy strike, price $80,000 when BTC is $75,000. Short put, you sell in OTM put options, easy strike, price $70,000. How it works in crypto: income generation, you collect double premiums from both the call and the put. The covered part, the long BTC covers. In the short call, the short put is usually cash secured, holding USD or USDC to buy more BTC if the price drops. Risk profile: it is bullish because you want to the price to stay above your put strike, but neutral because you want it to stay below your call strike to keep the premium. Part 2, top companies of March 2026. These are 5 companies, strong fundamental, currently showing the triple threat: strong fundamentals, government backing, and aggressive acquisitions. Company name, sector, strategic, growth factor, profit driver. Company name: Dixon Technology. Sector: electronics. Government support: PLI schemes 2.0. Acquisition: joint venture with HKC overseas, transitioning from assembly to high margin components, manufacturing display panels. Second company, Bharat. This is defense work, government and massive. Third company is Electronic, ICS, BEL, support Atmaril or Bharat Defense Fundamental. Mandates fundamentals: zero debit order book for radar and electronic warfare system, high margin recurring maintenance. Another company, Mahana Gas Energy, short form MGL. Acquisition: 26% stake in EPEL, diversifying from volatile gas to Brilliant solar, government support green energy transaction. Stable renewable energy PPA, power purchase agreement income. Last company is Kraken, pre-IPO or global. Fintech, crypto, acquisitions, recently acquired backed finance, dominating the real world assets RWA. That means real world assets. Tokenization, government support, first US SBDI bank character on market bridging traditional and finance crypto. Last one is Hindustan Aeronautics, aerospace, government support, multi-billion dollar LGA Tejas contracts, scaling export revenue to SEA, Asia and Middle East, high East profit, net profit. Excellent. Let's look at a real-time scenario for a covered strangle based on today's market conditions. March 11th, 2026. As of today, Bitcoin is trading at approximately $71,400. Volatility is high due to geopolitical shifts and recent short liquidations. Case study: BTS covered strangle expiration March 27th, 2026. That means 16 days to expiry. This setup long position issued 1 BTC costs $71,500. Short call this ceiling. Sell one call at $80,000 strike price. Estimated premium received $1,200. Short put the floor. Sell one call cash secured put at $65,000. Strike price estimated premium received $950. Total premium collected $1,200 plus $950 equal $2,150. Second, the profit or loss scenario. Best case, the sweet spot BTS finishes between $65,000 and $80,000. You keep the full $2,150 in premium. You still own your 1 BTC. Bullish case above $80,000. Your BTC is called away, sold at $80,000. Profit from price appreciation $8,500. That means $80,000 minus $71,000.5. That means $71,500. Profit from premiums $2,150. Total gain $10,650. You miss further upside, but you win big. Bearish case below $65,000. You are assigned and must buy another BTC at $65,000. You break even on the new BTC is lowered by the premium. $65,000 minus $2,150 equals $62,850. Comparison table. Why use a strangle versus a simple covered call? Futures, covered call, market views, single premium, slight bullish, neutral to range, double premium. Futures, covered call, profit value drops. With BTC, you may need forced buy more BTC at a discount. Capital required 1 BTC plus cash for the put. Key takeaway for March 2026 with the SIBO BITVX Bitcoin Volatility Index. launching later this month. Premiums are currently juicy. A covered strangle is a professional way to rent out your Bitcoin while waiting for the next major leg up to $90,000. Would you like me create a visual sort or a step-by-step guide on how to execute this on a specific US platform like Coinbase or Kraken to execute a covered strangle in the US? You generally use advanced or pro interfaces. Since this strategy involves three separate components, long assets plus short call plus short put, most platforms require you to enter them as a package or individual legs. Here is the step-by-step execution guide for March 2026. Execution guide: Coinbase Advanced and Kraken Pro. Step 1: secure the underlying the covered part. Before selling options, you must own the assets. Action: purchase 1 BTC or the equivalent nano contracts. Platform tip on Coinbase Advanced: ensuring your BTC is in your primary or trading vault allows it to be used as collateral for the call options. Step 2: sell the OTM, call the ceiling. This limits your upside but pays you an immediate premium. Navigation: go to the options derivatives tab, select BTC used, select call. Execution: choose a strike price roughly 10 to 15% above the current price, e.g. 80%, $80,000. Order type: sell to open limit order. Step 3: sell on the OTM put. The flow: this generates a second premium and commits you to buy. Buying more if the price drops. Navigation: say in the options tab, select put. Execution: choose a strike price roughly 10 to 15% below current price, e.g. $65,000. Requirement: you must have the cash USDC in your account to secure this put unless you are using a high tier margin account. Summary of 2026 platform futures. Platform best for 2026. Key futures: Coinbase Advanced, easy of use, automated rolling can auto renew your strangle every 2 weeks. Kraken Pro, deep liquidity portfolio margin, uses your ETH or BTC to lower the cash needed for puts. Robinhood Crypto, zero fees, unified UI. View your crypto strangle alongside your stock portfolio. Critical strategy: rules for 2026: avoid earnings or protocols. Upgrade, don't sell strangles right before major network forks or CPI dot releases, or as high volatility can break your range. The 21-day rule: most professional traders roll off or close their strangle 21 days before expiration to avoid gamma risk. Rapid price swings. Tax implication: in the US, premiums are generally taxes to short-term capital gains. Keep a record for your 1099 DA form, the standard crypto tax form in 2026. Please like, share, subscribe and comment. Another 2 minutes video is there. That is your hot touch video. You will find out what is what.
The Covered Strangle strategy is a popular approach in cryptocurrency options trading, particularly among U.S. traders seeking to generate additional income. This method involves holding a long position in a cryptocurrency while simultaneously selling both an out-of-the-money call and an out-of-the-money put option on the same asset. By collecting premiums from these options, traders can potentially boost their returns, but they must be prepared to buy or sell the asset at the specified strike prices if the options are exercised. It's important to recognize that this strategy carries significant risks, including the possibility of substantial losses if market prices move sharply. In the United States, cryptocurrency options trading is regulated, and platforms such as Deribit and LedgerX operate under strict oversight, requiring traders to comply with relevant laws and guidelines. This week, 5 companies have stood out for their strong fundamentals, recent government support, and significant acquisitions, all of which have fueled their profit growth. Coinbase, for example, recently acquired Deribit and was added to the S&P 500, contributing to impressive operating and net income figures. Ripple Labs expanded its reach through the acquisition of Metaco and secured regulatory approval in Singapore, enhancing its industry impact. Anchorage Digital benefited from a major investment by Tether, raising its valuation and solidifying its position as a federally chartered crypto bank. Crypto.com expanded its U.S. presence and formed a strategic partnership with Trump Media and Technology Group, while Digital Currency Group relocated its headquarters, creating new jobs and managing substantial assets. These strategic moves have collectively strengthened their market positions and driven notable profit growth.
And this is my affiliated marketing advice. And picked excellent just for you. My affiliate market website. Discover our exclusive collection at www.noblestoreshop. We have partnered with Amazon to bring you top tier product with the convenience, the speed you trust. When you shop through our curated links, you support our work through a small commission from Amazon at no extra cost to you. It is a simple way to shop smart while supporting our community. Quality meets convenience. Click below to explore your next favorite. Find shop our Amazon favorites now, please. And creators Google ads. Only the creators Google ads. Subscribe plus grow your channel. This is mine. Please like, share, subscribe and comment. Thank you very much, my dear traders, friends. We will meet next video.